Hello and welcome to another CMS Forex morning daily recap. Today is Monday, November 3rd, 2009, and I'm your market analyst, Nick Nassad. We start with the pound dollar pair, which fell overnight as we had news again from the UK financial sector. The partially state-owned UK banks, Lloyds and Royal Bank of Scotland, disclosed major capital raising plans to bolster their balance sheets and detail the divestments they will make to satisfy European Union competition concerns. The two banks will raise capital from both private shareholders and from the state, and as we mentioned, they've been forced to sell off assets. We could see that the pound fell below its low from yesterday around the 1.6330 level, coming to support only at 1.6260. The news today underscores the fragile state of the UK banking sector, and it was enough to push the pound lower, and it hurt stocks in European markets. We can draw a simple trend line to show resistance for this week. And if we zoom this pair out just a little bit, we had highlighted a trend line of support started from last week that was broken in today's trading, as we can see here. Our new support comes from a horizontal level from last Monday's low, which was the low for last week, and we did have a bounce up off that a couple hours before the US Open. Traders will now be looking for Wednesday's FOMC statement as well as the Bank of England meeting on Thursday for further direction in this pair. If we take a look at the euro dollar pair, we see that we had a pretty sharp slide from 1.48 around 2 a.m. Eastern, falling all the way to 1.4625. A couple of hours before the US Open. That broke below our horizontal line of support that we had mentioned yesterday and shows the risk aversion that we saw in the markets overnight. This fall in the euro dollar was preceded by a break of a short-term trend line here around the 1.4765. The other big news from overnight was an increase in the interest rate by the Reserve Bank of Australia, which raised rates to 3.5% from 3.25%. Now, the Australian dollar had been gaining prior to the announcement, but then fell rather sharply afterwards. This was a combination of a more dovish than expected statement from the Reserve Bank of Australia, as well as falling stocks in the Asian session, which were followed by falling stocks in the European session. Let me read to you the important part of the statement. With the risk of serious economic contraction in Australia now having passed, the board's views that it is prudent to lessen gradually the degree of monetary stimulus that was put in place when the outlook appeared to be much weaker. The adjustments at the October and November meetings will work to increase the sustainability of growth and economic activity and keep inflation consistent with the target over the years ahead. That statement dented expectations for a series of further hikes ahead, hinting even that a December rise is not guaranteed. Zooming this pair out, we see that our last 4 sessions or so, 5 sessions, have been much more volatile than the preceding several sessions, as you can see here. If we zoom back all the way to a 4-hour look of this pair, see that the 0.89 level is now going to be very important. Let me draw that in there. This level was important in the beginning of October when we had a break above 0.89, which helped us to rally all the way to 0.93. Now we had what looks to be like a rounded top here, and now we're retesting this 0.89 level. If this becomes a very important support, we may see a bounce back up. However, with the risk aversion sentiment so far, that's by no means a guarantee. Again, in all the currency pairs, we're going to be looking to what the Fed will have to say tomorrow, and that'll be a very important driver for currency markets the rest of the week. So I will wrap up with that. We'll have a look at how the markets did during the New York session in our afternoon daily wrap-up. For now, this is Nick Nassad from CMS Forex. Thank you for joining me here at FX Times, and have a good trading day.